Hello everyone, welcome to Just Invest Today. And guys, today we're going to be talking about the Berkshire annual meeting. Man, there was so much in it. I want to go over some specific parts in what Warren Buffett was talking about. And the part I want to talk about to you today is about interest rates. Man, I feel like I don't know what type of spectrum we are on because in one breath, Warren Buffett is saying that interest rates are really low, so he doesn't even think companies like Apple, Google, Microsoft, are those companies even overvalued right now?
Is what's your mindset when you see so many of these high flyers, not the GME or meme stocks, but more like the big tech growth stocks gaining 50%, 100%, 200%, et cetera, in a matter of a year or less? I know you eventually bought Apple in 2016 because of the quality of their businesses and their management. How do you assess if these high flyers are worthy of your investment given this crazy high valuations that muddy the waters?
Well, we don't think they're crazy. But we don't. At least Charlie. I feel that I understand Apple and its future with consumers around the world better than I understand some of the others. But I don't regard prices, and that gets back. Well, it gets back to something fundamental in investments. I mean, interest rates, basically are to the value of assets what gravity is to matter. Essentially, and
Interest rates have a kind of basically a direct correlation with asset prices, right? So if the interest rates are low, why would you not want to invest more money into stocks? Because you're not going to get any money on interest rates, or you're not going to get any money on bonds or investing with the Federal Reserve, the actual risk-free rate. So everyone's going to stack their money into asset prices because they're generating more cash, more returns. So on one hand, the market doesn't seem overvalued right now compared to interest rates right now, but that can change at any moment and at any time if the Federal Reserve raises that rate again, right? But we don't know because think about it. The Federal Reserve has came out and said that they have a loose policy right now, monetary policy. They have a loose one right now. They want to see this recovery go really smoothly. So Powell came out and said that he's not raising any interest rates. He's going to keep it as low as possible. And he can see this maybe happening for another 3 years. So if we look at it through that lens of of the Fed basically saying that they're gonna keep putting money into the market because you guys gotta remember the Fed is actually buying stocks right now. They're buying stocks, bonds, they're buying everything in the market, and they're giving money to the citizens, right? And remember, with all the bailouts, so guys, they're putting in trillions into market to make sure it's stable. So with all that in mind, are stocks right now really overvalued if we continue at this pace for 3 years? Guys, we don't, if you think about it, you don't want to miss out on all those gains that could possibly happen in that 3, 4 year period of time if the market keeps exploding. In this Berkshire annual meeting, actually, Charlie was actually a little jealous because he's seeing that all the little guys right now are honestly winning right now. The people are getting huge returns right now because the Federal Reserve rate is so low right now that it's crazy, making all these asset prices shoot super high, making that a little investor gain 20, 50%. All you see all these YouTubers 80% in the market, right? So on one hand, Warren Buffett is basically saying that he doesn't even think asset prices are actually overvalued right now in his own words. He thinks there's still a market for that, right? And he would have never have thought that, remember, back then in 1973, this guy wrote a book basically on economics, and he never even mentioned negative interest rates, right? So that goes to show you that this time right now is unprecedented, right? So when we're thinking it like that, this market can still go on as long as that interest rates is zero. The Federal Reserve is actually helping the economy, is keeping these asset prices still high by investing in the stock market, make sure they're buying bonds and all that stuff. So guys, we still have to be able to think outside the box and maybe even take advantage of this, because we understand right now that it's hard to find companies that are undervalued right now. It's hard to find companies that are undervalued. But remember, I said in my previous video, there's always a stock in the market today that's going to return 100 to 1. So we still have to be looking, even though the market is still overvalued, but compared to what Buffett said, it's undervalued. But on another breath, it's weird because then he says that he can't find anything in the market. So he still thinks it's overvalued. And what proof of that? He still has 70, $80 billion on the sideline waiting to invest, right? And this gets back to the second question. What is Buffett doing with his money? He has all this money on the sideline. People are complaining that, man, when are you going to put money in the stock market? You're not doing anything with the money, right? But guys, you have to realize what Buffett's strategy has always been is basically to wait on the sideline until people are just getting rid of their stocks. They're just fleeing the market, so he can just basically shoot fish in a barrel, just pinpoint all these stocks to buy. That has always been his strategy. Even Warren Buffett is struggling right now. He literally admitted in this video, which is a huge shock to me, that he's kind of buying companies that he doesn't know too much insights about. So that means that he's buying companies that he really doesn't understand fully. When have you ever known Warren Buffett to buy a company that he doesn't expect and know where it's going to be 5 to 10 years out? That means he's actually struggling to find companies, and he's putting money into companies that he thinks he pretty much he knows the business, and he thinks it's going to do pretty good, but he's not 100% guaranteed. So that shows you the struggle of what's happening in the market right now.
He says, if you deem stock prices to be overvalued or in a bubble, do you think it's best to keep your money in cash while waiting for prices to come down to a fair price? Or would it be a better idea to invest this money in some way while waiting until stock prices are fair again and then sell the investment to buy the stocks?
Well, Charlie and I have had that discussion on a lot of things. We bought some stocks we really don't know that much about, but I'm not really comfortable doing that.
You're used to shooting fish in a barrel, but that's gotten harder.
We've got probably 10 to 15% of our total assets in cash beyond what I would like to have, just as a way of protecting the owners and the people that are our partners from ever having us ever get in a pickle. You know, we really run Berkshire to make sure that we don't want to lose other people's money who will stick with us for years. We can't help what somebody does that buys it today and sells it tomorrow. But we've got a real gene that pushes us in that direction. But we've got more than we've got probably 70 or 80 billion, something like that maybe, that we'd love to put to work. But that's 10% of our assets roughly, and we probably won't get a chance to do it under these conditions. But conditions change very, very, very rapidly sometimes in markets. And
so, what should we do with our money right now? And that's what I want to get down to in this video, and it's a hard question to ask, right? Because I know a lot of people are sitting on the sidelines right now with a lot of money waiting for the perfect opportunity to invest. Because guys, Charlie and Warren Buffett said this is the most interesting movie they've ever seen. There's never been a time like this. So when you never know what's gonna happen, guys, but once that interest rates kind of raise up, you don't know how the market's gonna react. You don't know what's gonna come down the pipeline, guys, but we already know margin rates and margin debt is at all-time highs. NFTs, sneakers, stocks, cryptocurrency, all of that is just shooting up with no hindsight, no valuation, just buying, buying, buying. So this market is highly speculative right now. So we don't know when the movie's gonna run out, but that's not the point. He still needs to actually deploy money, and he's having a hard time, and he's even putting money into stocks he doesn't understand fully. So what I want to get to, guys, I want to know what you guys are doing with your money. how are you investing for the long term? How are you looking at stocks right now? Because in my opinion, I'm still trying to find stocks that are going to return good returns down into the future, even though I might like I'm probably going to still be buying stocks right now, even though um, it's an overvalued market. I think I can be able to buy stocks right now that I still believe that can have 10, 15% returns, right? And then when I feel like I got those returns, I can leave that market. It seems very counterintuitive to what I've been preaching on this channel, but I have my stocks that are fully invested that I'm sticking long term, but I'm still having these companies and investing in these companies that I believe in long term, that I can see a 20% rise, but I'm okay with giving them up in case a crash happens, and I can buy the stocks that I really, 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 really want. Like maybe a Google, which I think is too high, with a company like Five and Below, which is way too high. But the stocks that are low that I still like long term, and I think they're going to appreciate. But if anything, the market happens, I'm okay with getting rid of them, right? So that's what I'm doing on that side. And then on this side, I still have my long-term compounders that I'm going to hold for 10, hopefully 10 to 15 years strong. So guys, tell me what you think of that strategy. Tell me down below, what are you guys doing with your money? Are you investing? Are you saving it for a rainy day? Do you even have money to invest? Or are you just studying, learning about companies, doing all your due diligence? Tell me what you guys are doing. Guys, if you like this video, please like it, subscribe to my channel, and I'll get back to you in the next video. Peace.